What is going on, YouTube? And welcome back to another edition of ClearCryptos Education. My name is T. Hobbs from the Crypto Shop. That man above is Jay Seals. What's going on, brother?
What's good?
Listen, guys, sometimes we cover education, sometimes we cover the news, and today is no different as we will be covering the news on the Federal Reserve interest rate hike of 50 basis points. Now, at 50 basis points, it's kind of what the market is expecting, but Justin's going to explain to us a little bit more in detail exactly what was going on with markets today. So take it away, Jay.
All right. So the trend continues as the Federal Reserve has raised rates by another 50 basis points today. And I can tell y'all, Elon Musk was not happy about it because he said that the Fed needed to stop. But hey, he keeps selling shares of Tesla. So he keeps selling shares of Tesla. The Fed keeps raising rates. That's how I feel. But anyway, Jerome Powell had already signaled that the Fed was planning to slow rate hikes this month while they remain pushing rates in the final meeting of the year. And yeah, the last time he spoke, I don't remember exactly what the conference name was, but he did signal that, and the markets took off. So November saw the Federal Reserve raise interest rates by 75 basis points, which was the fourth consecutive rate hike since May. Yet this rate hike of 0.50 or 50 of a percentage points marks a marginal difference that keeps it from the fifth consecutive month. So basically, we got 4 months, and now we got 1 month of them actually lowering. But this is not the pivot, guys, not yet. So it's been the most aggressive economic tightening in 30 years, and it continues today. The news of the Fed raising rates another 50 basis points has come following a signal that the ease could be coming, which I don't know where they're getting their information from. Hobbs is going to explain that a little bit later on. But yeah, not so certain. So the same meeting in November saw the Fed raise interest rates to a target range of 3.75 to 4%. Conversely, that number remains at the highest level since the beginning of 2008. It seems as though this interest rate rise, noting the first decrease from 75 basis points since May, notes a marginal improvement. And I mean, that's true. We've seen CPI come down. We saw PPI almost come in line. So inflation is coming down overall. So the November meeting saw an optimistic Fed perceive this development. They acknowledged the lags with the monetary policy affects economic activity and accounting for the pace of the increase that was implemented today. The last meeting also saw Fed Chair Jerome Powell signal that a decrease in increases would come. Hence, the 50 basis points has come to fruition, justifying that very sentiment. Additionally, this December 14th meeting marks their final meeting of the year. So we got the 50 basis points, but the market, it ain't rally like everybody thought it would. After all the great CPI numbers, off of all the great PPI numbers, and then we finally get that 50 basis point hike we've been waiting for, and the market goes. So, Hobbs, tell us why that happened, bro.
All right. All right. So here, let me take you guys over down a little bit of a road here. So let me switch my thing here. Hang on, give me 1 second. I'm gonna go to my day chart over here. Okay. All right. Okay. Now let me switch my screen. Okay, look. We talked about this in multiple times on my channel. If you guys aren't following me over there, it's the Crypto Shop. But this line right here, this trend line, we've been in this trend line for a year, underneath this trend line for a year. Every time we touch the top of this trend line, we get rejected. We touch the top of this trend line, we get rejected, so on and so forth, right? Well, yesterday or day before yesterday, we got CPI data. We basically pushed above this trend line, but we couldn't hold it and we got rejected. The same thing is happening here. So the question becomes why? Well, today was a little bit of a curveball, so to speak, because the one thing that you have to understand is besides the interest rates hikes, right? The basis point hikes that we continuously get, there's another thing called the federal fund rate, right? The federal fund rate is basically where the Fed wants to see interest rates toward the end of a certain time frame. Well, up until today, that federal fund or the end rate was supposed to be around 3.75 to 4%, right? Or 4.25 to 4.5%. That's where we are, right? 4.5 to 4.75 was the expected. Once you can get that expected number, you can kind of break down exactly how much the Fed's going to be raising rates on a quarterly level, right? Based off that number, you expect us to be able to stop raising rates at a certain level and then to start to pivot and turn around. Well, the market was expecting a terminal Fed fund rate of 4.5 to 4.75, but the Fed threw us that curveball and gave us a federal fund in rate for 2023 of 5 to 5.25, which would indicate that we're probably going to keep raising rates, whether it be zero point 0.5, 0.25, 0.5, 0.25, whatever that number is. This is an indication that they are willing to raise this federal fund in rate of 2023, and that's why the market decided to turn around and reverse, because if that holds true, that means the market can sell off and be prepared later for the Fed to raise interest rates just a little bit. But at the same time, we priced in zero point 0.5, we didn't price in 5.25 or 5% federal fund in rate. So once you don't price that in, the market has to kind of sell off to get back down to levels that can fit the federal fund rate percentage into the macroeconomics. So it was a much bigger picture that was in that speech than most people realize. And a lot of people, I even saw on my Twitter feed and my Discord, a lot of people really didn't understand, well, we got 0.5, why are we dumping? This is why. It's because of the federal fund in rate. So I hope you understand. If you don't understand, please leave a comment down below. Come to the crypto shop or come back over to the Clear Cryptos education channel, and we'll do our best to explain it to you. Justin?
Yeah. So, I mean, basically, this means strap in for a long ride for bear market for 2023 into 2024. Because if you watch Powell, you watch him speak, his number one thing every single time he gets on the mic is we're fighting inflation and we're going to do everything we can to bring inflation down to 2%. They even asked him, would you be okay with like 4%? He was like, 2%.
2%.
It's 2.
Yeah.
So
Numbers
just
2.
know they're locked and loaded and ready to get to 2% regardless of what happens to the economy. Yes, they want the economy to not go into a recession, but they'll put it there if they have to. So it just is what it is. You know, the more you arm yourself with knowledge, the better. And this is one of those things where it's good to know.
Yeah, absolutely. So just remember, guys, this won't last forever, but that 2% is very important to the Fed. And it seems like they're going to do everything in their power to do so. But also remember, the Fed has tools to reverse this process at any time. They can turn that money printer back on, they can lower interest rates back down to 0%, which in this case, if they continue to do this all through 2023, 2024, I wouldn't put 0% interest rates out of the chances. So just throwing that out there. Don't get too excited. Let us know down below in the comments what you think. Don't forget to like, subscribe to the Clear Cryptos channel if you like the information that we bring to you. But guys, we're gonna get out of here. My name is T Haas from over at the Crypto Shop. That man above is Jay Seals, and we'll catch you guys on the next episode of Clear Cryptos Education. Peace.